Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, August 8, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, the S&P had a nice big-time healthy up day, up about 2.3% on the Spiders, about 12 bucks. We were looking for a low. We found the low, or they found the low, and we had the reversal of the reversal, if you will. Yesterday, we talked about this last night's down finish, the down candle yesterday. Was that going to be the follow-through to test the lows, or were they going to reverse the would-be or looks like a reversal candle? Well, they did the latter. They reversed the reversal. In spirit, if you will. It's not a bona fide reversal candle today. They just reversed the tape. They were up over 100 handles today on the S&P, 125 points on the ES. And you have an unfinished gap up here, or unfilled gap above yesterday's high. Is that the final destination? Or will they run a test of A, this trend line again, or B, the convergence of the 20 and the 50 period moving average to also fill a gap all the way up here? Will that take place? And the answer is, why not? You also have a bona fide trend line that connects the high and the high over here. We're talking about the same candle from August 1. And guess what? Depending on when they come into it, you can see where you have a gap, a convergence of moving averages here. Just above it, you'll have a downsloping trend line. That's an important place. I would write that place down. I would take a snapshot of this, and I would put it on a sticky note. And here's the thing. We'll remember this. Some of us will remember this if and when this happens. But if the market is up near that trend line, testing that trend line, nobody here is going to be surprised at how high they got off the low. Tons of traders want to short the market on the first bounce whenever they make a low because they never believe that the low is in. So for example, yesterday, what was happening into the close? They were shorting the tape, figuring you're going to get a gap down on Thursday morning. What happened today? You got a gap up, back in the other direction. What happened? You got it. You got a conveyor belt of pies in the face. They do the same thing over and over and over again. There will be another leg down. The bounce/rally doesn't have to be over yet. Volatility will remain prevalent between now and the election. Put your seatbelts on, tray tables in the upright position. You got the Trump and J.D. Vance show, and then you have the Harris and Tampon Tim show. Look for a knockout, knockdown, drag out type of routine between now and the election. It's not really directly tied to the market, but it's going to appear like that from time to time. It's a show. Get your popcorn out. Look at the reversal candle they got working here on the weekly chart. Are they going to fill that gap before the week's out, meaning tomorrow, Friday? Speaking of tomorrow, Friday, some of you had otherwise thought I was going to be out tomorrow and Jordan would be running the live room. There's been a change of plans. I will be running the live room. We're going to switch to next week, so it's going to be moved forward 1 week that I will be out. Net, all you need to know right now is we'll be there tomorrow. In uniform, ready to go. Remember what I said? I believe it was even on Monday, maybe it was Tuesday, but nevertheless, what I said was, and we use the prior pullbacks. Markets go down, they bounce back up. Markets go down, they bounce back up. Markets go down, and they bounce back up. And that's what happens in an uptrend, which we are. Above the 50-period moving average on a weekly chart is considered an uptrend. Getting below the 20 for a few days and bouncing right back to it is a bullish situation, provided they recapture it and not reject it at the 20. And by the way, what do we call yesterday's candle? Yesterday's price action, yesterday's activity. We call it the rope-a-dope day. It is designed to make you believe the rally is failing. La bear trap. You got bull traps, you got bear traps, you got mouse traps. The market's job is to make as many investors and traders look like fools as much of the time as possible. Anybody make any money today inside the numbers in the live room? Remember, pause the video, read the notes, go back to the chart to double check the work. None of this stuff here at 0 dark 30 really matters now because they had what's called a goose operation after the 8:30 a.m. data release. And that's not data release, it's data release, D-A-T-E-R release. So let's fast forward a little bit and see what we have. 8:30 data release was used to run a goose operation. So here's what we got now. We had 521.05, we had 523.65. Let's start there. Above that, we have 525.65, and then we even have higher numbers above there. We were in the midst of an early pre-market melt-up operation. They have an early pivot. They never even got to the pivot, 521.05. And here it is. If there's going to be a short, 9:15 in the morning, if there's going to be a short, for me, it's between 527.65 and 528.50. And there you have it. 527.65 to 528.50. Not a tremendous trade, but nevertheless, they came right up into the zone. Let me get rid of the box and stuff. Came right up into the zone and did have the bona fide pullback. For example, the low in this candle is 526.41. So it's 20 points from the top, 10 points from the first place. Still a bona fide decent trade, but with a range expansion, in retrospect, that's pretty much the scalp and that's all they gave us, even though it's more than a scalp. The rest of this floater stuff into the afternoon is just that. And by the way, we had traders riding it up to that zone, absolutely. We had traders ride it up. We had traders short the zone. We had traders take a two-way double barrel situation. Pause the video, read the notes, go back to the chart and double check the work. 10 o'clock, if they can get above and stay above 525.65, the next target becomes 527.65 to 528.50. There will be a stone cold short if reached anytime soon. And it was. Not a collapse back down short, but a short from a trading intraday scalp with potential perspective. Pause them, read them, double check the work. It's all in here. First order of business and overhead resistance is they stop going in the direction they're going. They've done that. Getting below 527.65 is the case to fall back. All that stuff. It's all in here. The trade worked out. And that was pretty much the only SPY. We had some traders wrote it up and then we had one short, other than some stocks on the move and a couple of other things here or there. That was a quiet day from an S&P perspective. It was a one-way ticket for the most part today, not a trader's tape with a gap and go type of situation. We all know that. What did we have from a stocks on the move perspective? We're going to take a look at Monster, McKesson, Bros, which is Dutch Brothers, and then Frog and Sedge, SEDG or Solar Edge, did not hit their entry objectives. They're off the board. So we'll look at the first three. First up, Monster Beverage. First number, they opened below, so it's off the board. It doesn't exist. So you see what happened. They came into the second number, came up just short by pennies of the third, went back up and gave you the trade above the first number. The numbers work. Wasn't a home run trade, but base hits put you in the Hall of Fame. I can assure you of that. How about McKesson? Check out these three numbers. So the first number works. They came up short of the second, so technically the second's off the table. But then if you want to get cute, the third number, they spike it by a few pennies and rip it back up in the other direction, right back to the second number. So from a minute-by-minute, play-by-play perspective, they gave you $10 out of the first number, and then 10 or 13 or 14 bucks out of the third number, and technically painting by the numbers, the second one would have been off the table. The numbers work. That's the point. Again, base hits put you in the Hall of Fame. And then there's your Dutch Bros. Help a brother out. Relatively tight zone, a buck apart. They came into both numbers. They came into the second number. It was really the second number. They went back to the first, busted through. You never know which ones are going to give you the rocket ride. While this doesn't look like a rocket ride, when you do the numbers from an intraday perspective, it is a rocket ride. 27.12 up to over 30 bucks is a rocket ride in one day, even in the morning session. How you doing? What's going on over in Camp IWM? It's all the same market for the most part right now, and things bounce this big. You got 2% up days, 2.5% up days. IWM's up 2.4%. SPX is up 2.3%. These are big days. They're all going to follow suit with each other. It's just a matter of who's got more juice versus less juice. Get above yesterday's high. They go fill the gap up here. At some point, they're going to want to get into this no man's land situation. But the next thing we have from today is above yesterday's high. They can go fill the gap. On a failure, getting below yesterday's low is a crap out type of situation, by the way, in either market. What about the folks down at the transportation department, right in the middle of our triangular zone, trying to recapture the convergence of the 100, 200, and 50 period moving averages? When you look at the weekly chart, they tagged the 100, bounced off of it, trying to recapture the 20, which is the last moving average in the weekly moving average line of defense on the upside, meaning above all the moving averages, trend is your friend. Next scene would show they're working their way back to the top of this triangular channel situation. The Q people up 3% today, 13 bucks. No revelation here. Trying to get above yesterday's high, not today, not in the cards today. Get above tomorrow, and they're going to start working their way up toward the 100 period moving average. Of course, yesterday they did fill their corresponding gap that we looked at in the other markets that are unfilled as of yet today. Nice healthy up day, 1.6% for the financials. Nothing wrong with the financials. Unlikely the rest of the market's going to be unraveling like a spool of thread. They filled the gap yesterday. They're above the gap today. So on a relative basis, chart to chart, the XLF is actually in a relative strength from a chart perspective position. How do you like dem apples? Dipsy doodle on the weekly chart to check in and run a test of spike through the 20 period moving average. Immediate recapture is a bullish signal for now. Might as well stay on the weekly chart. You got smash mouth, the Philadelphia semiconductor space, short of the 50 period moving average. Interesting how that worked. Right through and right back up. They spiked the the 200 period moving average, bounced right off of it, but they're not really yet making the secondary move. You got to fill this gap and get into what will be a convergence of the 20 and the 100 period moving average up here at 237, give or take. But they got to get up to this gap that happens to be at 231. Still a bounce and a downtrend on a daily chart for sure. Long-term uptrend on a monthly chart for sure. Weekly chart, as long as you hold the 50-week moving average, it's in an uptrend. The trend is your friend until your crap gets thrown out the window. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.